Welcome guys in this beautiful video. So we are gonna be speaking about the technical analysis of volatility 75 or the technical analysis of synthetic indices. So I believe this video is going to be helpful when it comes to mastering synthetic indices or being able to trade them in a profitable way. So it is not just limited to V75 but all the other synthetic indices, whether it's step index, whether it's V100, whether it's V50. So it's applicable in all those instruments. So before I can get started, you can support the channel by hitting the like and subscribe if you're not a subscriber. So what you need to know is that when it comes to technical analysis, a lot of people think that it is a broad topic, yet it is just something narrow. Technical analysis is not that broad because it involves trend trading. It involves support and resistance or range trading, and then it is indicators. It is technical indicators. So these are the three aspects of technical analysis, but then these two, they are then broken down into pure price action, where there isn't an involvement of indicators. But when there are indicators involved, it's technical analysis. But when we remove this third part of the list, then it becomes pure price action. So when it comes to technical analysis, the main focus or the main goal of a trader, it is to master these two, to master trend trading and as well to master support and resistance. So I'm just gonna break down these two things here, and a very good way on applying them in synthetic indices, a very profitable method. So firstly, when it comes to trend trading, as you know that this market, as I always say, that it is a trending market. In most of the time, it is either moving up or moving down. And when it is moving in a range, usually the ranges, they are not clear. They are not clear. They are not straightforward. So in most of the time, you find this market either moving up or moving down. So that's why I always encourage a lot of traders that when you find the market moving in an uptrend, don't just hesitate, but just follow the move of the trend that you found in the market. So it is not usual, or it doesn't enter in ranges in most cases, but I will explain that in the second part of this video. So when it comes to trend trading, the best way, because this market doesn't behave perfectly, although sometimes you can see it as a perfect move. Just for an example like this, in this scenario here, you can see that okay, all the lows are touching the trend line, but it is not always the case that the lows are gonna be touching the trend lines. It's not always the case that the lows are gonna be touching the trend line. So sometimes it will be just going up before, or sometimes going up after it breaks the trend line. So you might think that it's a breakout, yet it's not a breakout. So the best way to approach a trend in synthetic indices, it is to use the method of value investing. It is to use the method of value investing by saying, okay, I can see the market is moving up, but what I will only focus into, it is not just drawing my trend line in my lows here, but it is actually to make sure that I identify the intrinsic value of the move. I identify the intrinsic value of the move so that you do not miss any entry. I'm just gonna break this one down quickly. So understanding the intrinsic value of the move or of the trend, it will help you not to miss any move. For an example, let's say you've identified just like this, meaning an intrinsic value, it is like the flow or the mean of the slope of the trend, how the market is moving upwards, either is it strong or is it weak. So that's the intrinsic value. So then once you identify it, your role as a trader is make sure that you only observe if the market is above or the market is below the line of intrinsic value. So if it is below, then that's where you're going to be looking for buying opportunities, not actually drawing your line touching the lows. It's good to draw it like that, but also you can add this method into that system. So usually when you see price going down below this line, you should make sure that then you wait for price to start facing up. Once it start facing up, then you put your buys. For an example, it breaks the line, it's now below, meaning okay, we are ready to buy, but let's wait for price to begin to go up. So when it begins to go up, you enter your buys. When it begins to go up here, you enter your buys. When it begins to go up, you enter your buys. When it begins to go up, you enter your buys. When it begins to go up, you enter. So you will not miss anything, even if it is not touching your trend line. If you are a trend line trader, for an example like this, let's say you firstly draw a trend line here. This spot doesn't touch your trend line, maybe even this one doesn't touch your trend line. Maybe you try to shift your trend lines again, you draw it here. So there are still some zones where the trend line is not touched. So we try by all means that we don't miss such areas. That's why you implement this value investing method. So that's a best way in trending markets. Then when it comes to ranges or horizontal moves, then it is very simple. I've made a lot of videos about that. Now, what you should be focusing into, it is focusing at almost those highs, not on those highs, but at almost those highs. For an example, we have a low here and we have a high. So usually what you should be looking at is making sure that you focus on price when it is approaching or when it has just broken that high. Remember, for us to trade a breakout, it has to be retested. So usually when you see a market breaking out like this one here, it has broken this low. So because there is no retest, it doesn't mean you should be selling. It can tell you that if there is no retest, it means that price might quickly come back again and close above that breakout area. So that's how you should look at it. And again, you should make sure that you also look when you have a high, something like that. Make sure that when the price is almost at that point, observe the behavior. When it start to enter in a transition mode or in a minor straight mode, it might mean that it can now go down before it reaches that resistance. For an example here, it entered in a transition here before it reached that high, meaning it was facing resistance before the actual resistance. So that's how it usually behaves. Then it means that when you see market begin the market begin to move down, then you should take advantage of those moves. So that's how you should look at it. Don't just be saying, okay, I have a high, I have a low, or resistance and support. Don't say that price is going to react here in a perfect way. It doesn't work like that. Maybe in currencies it does, but here it doesn't work like that. Even in currencies, there are usually some slight disobedience of these lines. So same thing applies here. Usually here, either the line is broken and then price comes back again, or it bounces before. So make sure you pay attention. If a breakout is happening, there should be a retest for us to confirm, because the other method that we like here, or the other method that I prefer here, it is to trade support becoming resistance, or vice versa, resistance becoming support. So that's the best method. So this method is just it also another word for retest, because a retest, it is whereby now this resistance has became a support. So that's a retest. So it's the same thing. That's what I encourage in ranging or in a horizontal market. Even on trending markets, when the market is shifting strength, I'm sorry about that, when the market is shifting strength, it always shifts strength in a manner of a retest. Usually that's what I always say. That's why I always say when the market is trending, it will shift a strength in a manner of a retest. So I hope this video was helpful. Remember to like, share, and subscribe. Thank you.